Joining us now, Piper Sandler Senior Research Analyst Brent Bracelin. Brent, I believe that outlook was actually moved forward a little bit. So how do you sort through the names in this sell-off that has really hit all of cloud and software over the last few months? How do you sort through the names that are attractive and could be M&A targets?
Sure. It's a little challenging because if you think about the cloud group, we're now talking about a group that's 105 different stocks, all tied to the cloud. So that's up from about 70 a year ago. That's up from 25 just about 5 years ago. So the number of cloud stocks to choose from now is created a challenge. And in our view, the focus really in the short term is really on buying the best cloud models, the companies that can sustain the growth, the companies that can hold the growth. To me, those are the areas where we're most bullish on from a near-term perspective. This is a group that's down 30% since the beginning of November. So it's been a very, very challenging space. The good news, we're now nearing 3-year trough valuations for the group. And so the valuation risk is less, but still, I think there's going to be a hypersensitivity to the models that can sustain the growth.
Okay, so Brent, what are those best business models? Are you looking in the enterprise space? As you say, cloud covers so much now. We talk about everything from Peloton to Shopify to some D2C brands even want to be cloud companies. So what are those best models with the best fundamentals?
Fair enough. In the short run, I think the bigger risk lies with some of the consumer-oriented B2C companies because of some tough compares. And we're really focused on more of the enterprise space. So these are companies like Bill.com. This is a company where they have a business model where 70% of their revenue is actually tied to a small take rate. Every time a small business pays their bills, Bill.com gets paid. Additionally, Bill.com has a business where if the Fed funds rate continues to go up, every 100 basis point rate hike, they get about $30 to $35 million in incremental revenue. So one of the few cloud names that actually benefit from a rising rate environment. So Bill.com is one of our favorite names in the space, all B2B. Another company is called Procore. They do construction software. This is a business that has majority of their revenue as a take rate, but instead of recognize the revenue when you buy that sweater online, they're recognizing their revenue over a 5-year period that it takes to build a $100 billion building. So we like these business models that are part software, part take rate, mostly tied to the enterprise. These are really strong, durable business models that we're very focused on.